I'm going live.
It's next level, though, isn't it?
All right, those of you just joining in. Let me know if you can hear me. I'm gonna wait for everybody in the group to kind of get in here. So, just 1 second. Thanks, Georgie. Let me know if you guys can hear me. Those of you in the Discord and everything like that. Those of you in Discord, I can see your streams or your say 40p. Is the video quality okay? Cool. All right. We'll go ahead and let everybody hop in here, and we'll go ahead and get started. Share it with your friends, or preferably whoever's in the chat. That's hilarious. That can't make memes out of this. I tried to meme-proof myself. I don't know if it worked. Urban Farms Project. Feels so professional right now. You can throw paper if you in your own house. One second. Ape strong again. Yeah, this is all being recorded right now, so it's already going to be edited and uploaded. So my computer doesn't explode. Big Stepper, what's going on? Where's the SS shirt? Van, bring me an SS shirt, please. Got you guys. Thank you. All right. There we have it right there. Simple Stacks, it's a real thing. These are not gilding shirts either. These are cream of the crop, the next level, so 100% cotton. Manny smell. Alright guys, a few more minutes and we're going to go ahead and get started. I'm going to give it till 5:05 and we'll get it going.
Which one? Yeah. Yeah, I have no idea. Yeah.
Oh, thanks Urban Farms. I appreciate you, man. We're most of the Discord and is going to be doing a quick swing trading class here. Kind of get a idea of how I yeah, of course. Kind of get an idea of how I my personal strategy into swing trading. You know, how I go about finding momentum, that kind of stuff like that, finding good contracts, etc., etc. All right, and you guys can see my computer with the net Palantir chart on it, correct? Okay. All right. Thank you, Jeffrey. We're not going to destroy. I'm in PLTR. There's no dreams getting destroyed here. I'm with you guys on that one. Alright, welcome everybody to the stream. We're going over some swing trading stuff. We're giving it just a minute, letting everybody hop in here. We're going to go ahead and get started. So if you guys if you guys have time, share this. You're in a 20 lot for PLTR. Oof. I mean, if it works out, we'll go over that chart just because it. We'll go over how that looks, as far as swing trading. All right, guys. I'm gonna go ahead and get started. Is Astro in here? Should you buy a Lucan coffee? That's a no. Oh my God. Never seen a candle that big in my life. B&B? While we get ready, wait for this guy. We'll go over that. I'll go over what the difference is, all that good stuff. So. Okay. Alrighty. Everybody ready? No, please don't buy, they're making an EV. Oh. Do it. Buy it. I'm not 21. I might Venmo somebody $5 or Cash App someone $5 if you guess my age and you don't know me. Yeah, if anybody is not in the live trading chat, is Georgie, everybody in there?
Yeah, it's in right there.
Nope. Okay. All right. There you go, Miles. Z-Wolf. Yep, you got it. That was a tie. All right. Let's get to it. I'll be 29 in May. So the first question, obviously where we want to start, just get an idea of what we're working with here. So swing trading in itself is just basically finding opportunities or stocks that we think that are going to go higher in the long term, and we're looking to take a chunk of that profit, or whether it be with options or anything of that nature. So we're buying something and then holding it for multiple days or just overnight. And I think that's where I've got my start. Swing trading has been a confidence builder for me, because finding the setups, especially just starting a while back with a small account, those type of things can help build confidence when you're able to really dissect a play and find out whether this thing goes higher. So putting the house on Hertz. There you go, Frank. So with swing trading, the first question that I usually get is where do I look? Where do I find these plays? Where do you? I think Manny, one of the admins in our group, one of the first questions, he was like, where do you find these takers? Like, who's ever traded that? Who's heard of that? And I'm essentially going at it from the perspective of, I use the Native American buffalo analogy because it's good in the sense where you're following the money, right? Because we all love our stocks, but every stock takes a breather. Every sector takes a breather. So you got to be able to switch your feet and move around and be able to find out where those momentum plays are, and where the people are gravitating to, or where they're going to gravitate to. And so those are really important factors to be looking into. So first things first is, and it's going to seem silly, but we got to go where the people go, right? So StockTwits has been one of the best. Shout out to StockTwits. StockTwits has been one of the most crucial, just as far as navigating their website, being able to see earnings, being able to see all that good stuff. It makes for a good way to consolidate all of this information. I'm going to show you guys here on the chart really quick how I kind of just, and this is just the start, right? Because finding swing trades is not like a scalp. We can't just see the volume, see the pattern, and take the trade. Look at the price action, look at the tape. You know, like those things happen fast and quick. Penny scalpers, that kind of thing. We can usually look at a setup and play it, you know, really quickly, get in and out. With swing trading, we want to find out maybe, you know, like with GRWG, I've been holding equity for, it feels like almost like 9 or 10 months now. I've been swing trading that thing for quite a long time, and the sentiment from $5 to $20 was that this was a $60 stock. The only thing that held it up was the Hindenburg report. I was looking at cannabis companies, and it was right the day before the earnings for GRWG, and GRWG came from a SPAC called Seagrow, which now actually is an acquisition company that usually deals in cannabis. At the moment, they're reaching out into LiDAR and all that other good stuff. 13. DJ, what did I say? 13? Okay, so right off the bat, I saw that GRWG was trending on StockTwits, right? So anything that's trending is because a lot of people are talking about it. And this goes back to doing research on social sentiment research on things like Twitter, right? Because Twitter is the new stock hall. It's where everybody goes to find out the information that they need. As far as, you know, not even find out information, but just get an idea of what some of these, sometimes even the business owners will tweet and disclose information, or, you know, give you a little teaser, or say, I think my stock's too high. And those things directly affect the stock. And so when we're looking into, you know, these social sentiment sites and we see things that are trending, they may only trend one day and never trend again, or they may trend for one day and then you may see them trend a month or two later because they jumped up and people left it alone, but the buying opportunity is still there. So right off the bat, if you guys look at my screen here, I can go and I can look. Usually when I'm looking at earnings, I'm looking to go at least a week or two out, and I want to see, because they're going to do one or two things. They're going to run up into earnings, or they're going to kind of bleed into earnings. Right now, JMIA is bleeding into earnings. I think that's on the 24th, I believe. So a lot of times I see what earnings are coming up this week, what stocks, you know, that catch my eye, obviously. So Wednesday, okay, I'm gonna be doing this live. I haven't pre-charted or pre-done anything, but I'm gonna give you guys the process as if I was just sitting here at my computer, you know, 13 months holding for equity. Is that how long? 13 months. Okay. I don't know what that means. But so I'm just gonna, you know, give it to you guys basically how I look at it. So, snow. I just saw that snow reports this week are on March the 3rd, right? That's one that we already play. That's one that has the contracts pay really, really well. I think Astro in our group he's one of the Ozone pros. Let's go here. Thought I had my trading view up. All right. Well, I got to log back into trading view. Sorry about that. All right, so we're going to go to snow. And we're going to look, and so where to start? So the first thing that we want to do while we're exploring, because what I'm looking for is I'm not spending a lot of time on these sites. I'm just looking for the sentiment. I'm looking for what's popping up, what has already been hot and may have an event coming up soon. I'm looking for anything that's going to spark investor interest. And so the first thing that I like to do is when I find these tickers is I like to start always on the weekly. and the 1 day. And I start there. That's where I start always. I don't look at for swings until I've at least charted the entire thing on both. Having a little bit of loading issues here. Can you guys still see me and hear me okay? Trying to make sure. Okay, perfect. Just want to make sure. I know there's a bit of a delay, but... Okay, so we can get Snow here to load. Those of you in Discord, I'm going to shut Discord down. It's slowing down my RAMs. So just type in the YouTube. Alright. Or not my RAMs. Slowing down my BPS or whatever it's called. Okay, so let's start here on the weekly. And it's going to be pretty simple. I'm going to go find my trend line. I apologize for my screen being so laggy. I'm still investing in my setup here. Okay. So we're going ahead and we're looking at the weekly, finding our support, finding our resistance. We may not have one established yet. Alright, so now we're on the daily. Seems like it fell out of a Head and Shoulders. And now it's bounced here twice, going into earnings. It's down here at that 2025. We can only see part of the screen. Let me see if I can adjust that. Oh, I see it. Okay, here, I'll adjust it. Give me 1 second. This is my first stream, so forgive me if things are a little off kilter. I'll fix that right now. It's a little hot in here, damn. Okay, so we should transition. How's that? This is all a learning experience for me, so I appreciate your patience. Alright, tell me how that looks. Good? Sweet. And not every ticker that we go and explore is going to present a good opportunity. So just because we go look at Snow right here, if I don't see a good opportunity, then I'll just move on. I move on and I don't go and look at it again. I don't try and force opportunities. I want to see clear, nice, clean setups. So here we're sitting on support. We've already bounced off of support. Volume is really, really low. And so far, I don't really see any setups here, at least on this time frame. So I'm going to keep it moving. So let's go look. I'm going to use Baidu as an example, just so I don't waste time here. Cool. Alright. So right off the bat, with Baidu, right, we found our sentiment. We've already known Baidu has We've played it up and down in our Discord group. We know it has the underlying momentum in order to drive it higher. And I'll go over several different examples, big betas, small tickers, and stuff like that. So, but with Baidu, right, we can go here to this hourly. I'm going to scroll back just a little bit and show you guys what a high probability setup's. So the 9-day moving average, the rule of thumb, is that if we're above the 9-day moving average on the hourly, right, and ending with a bullish pattern. So 9-day moving average on the 1 hour, preferably the daily. You'd like to see it above that on the daily, but a lot of times, at that point, it's already making its run. But right here, and let me go ahead and just kind of circle this so you guys know what I'm talking about. This setup right here. I don't know if you guys remember swinging that Baidu call with me, but that was one of those situations where we ended the day with a really controlled pullback. The pullback happened on low volume, and we bounced right off of the hourly 9-day moving average. So at that point, I'm looking at this. This is an obvious bull flag. I like how when I point, let's see if I point that way, it looks like I'm on a green screen. Sorry. So if it's sitting on that 9-day moving average and it's had high volume, it's had accumulating volume. So you can see here, we have this, looks like February the 4th, rising volume here. Any sell side, it seems like any pullback, you get low volume, and on the upticks, you get higher volume. And that has consistently built up over the last couple days, or these last couple days. So then, boom, we're here. On February 9th, we obviously played this to the upside. Once we get to the end of the day, if it settles on the 9-day moving average, and this is going to be a situation where we're obviously, if we're playing that during the day and we're trying to figure out whether we should take this trade tomorrow, or if we want to take it as a swing trade into tomorrow. And that being said, I mean, that's a really obvious setup for me. High volume. It's also ended the day. Look right here on the bottom of that Scholastic indicator, the Scholastic RSI. And so that lets me know that it still has room to bounce to the upside, which it actually didn't even take advantage of that. It gapped up, and we just took profit on it there. But and so that's for, like any situation where you're playing something during the day and you have an opportunity to use the last 15 minutes to look at all of these different time frames that you're trying to take advantage of. Look at the daily, look at the hourly, mark out your resistances and your supports, and that way you can find out, like where the price is at and if you're going to see some continuation. Now, kind of going back, so let's see, I'm trying to think, what is a ticker that we had? I had written down a couple tickers for you guys. All right, so another one that I found is that volume oscillation. Yes, so this represents volume. The orange line right here, that's going to represent the volume moving average. I set alerts on the volume moving average on the hourly in order to make sure that I get alerts every time the volume surpasses that, and that way I get a leg up on whether or not it constitutes enough volume in order to give you a breakout. So back to what we were talking about. So the weekly and the 1 day, that's where we're going to start looking at our charts because we want to see the bigger picture. Then, obviously, we go down to the hourly. So we're going to examine this on the 1 hour, and we want to see it above the 9-day, or if it's not above the 9-day, we want to see it bounce off support, like let's say it's a double bottom, and be looking, be heading up towards a EMA crossover. So if we're below the 9-day moving average, we want to see a strong bounce off of a daily or weekly support. But this hourly time frame is where when I start on the daily and I start on the weekly, I go directly to the hourly after that, because the hourly is a good median between the daily, between the daily and the lower time frames like the 15 and the 5. And for me, I feel like it consolidates the two and gives me I can still see the bigger picture, but I can also identify smaller setups. So today I asked some people in the group, did I get that at close? Yeah. So I signaled Badu at close that day, ending the day with a bull flag. It was just a really nice. It was a really high probability setup, and obviously with those, with a swing trade, the benefit is that you can get into this trade, and then when it gaps up, obviously you get the benefit of the price movement. Um, what volume indicator do I use? Just volume. It just is the built-in volume indicator on TradingView. And then you go to the little cog, the settings, and you change it over to make sure they have a volume MA. Yeah. All right. So taking advantage also, and I'm going to add to these things. So let's say we find a ticker that we like that's a smaller cap. It's not a big ticker. And we're looking for signs of continuation, or we're looking for those sentiment, like the sentiment that I'm talking about. I'm going to go back to, oops, that's the wrong one. I'm going to go back to StockTwits and kind of finish my explanation there, kind of veered off path. So that way you guys can get an understanding how I'd actually dive into and really utilize StockTwits in order to get an idea of how sentiment goes. So let's, you guys can throw out a ticker if you know of a smaller cap one, kind of blinking here. I'm going to go pull up my watch list though. Ozone. There we go. And so before I go look at the chart on Ozone, I'm going to show you guys how to take advantage and how to utilize the actual StockTwits tools that they have on there. So not only do they have the price, the sentiment, and the message volume, but they actually have physical like graphs for those. So you can click on them if it ever loads. There you go. And just to, if you're charting something or doing technical analysis and you see other people's D&D or it's okay to adjust your analysis to theirs if you didn't or you missed something. So this is a good place to do so, because I may or may not agree with whoever's chart this is, but I can look at it and we have me and I don't know whoever this guy I draw lines is, but he drew the same exact flag that I had drawn. And that flag pulled all the way back to that resistance and bounced right off. So there you go. There's an additional confirmation, right? Not just me. I'm not the only person who saw that. So we can go here to the price, and we can also go here to the sentiment, right? Because what's most important about stocks is the people who are buying them. So here we can see how the sentiment is stayed relatively bullish. And very, very light. It seems like we've actually had a bit of a decline, and that is due to that pullback. So people looking bearish at the stock. So here, now we see our stock. We like our stock, and we're going to go ahead, say we didn't see that bull flag. We're going to go ahead and we're going to look at Ozone. All right. And just like I said up there, we're going to start on the daily. Okay, so running off the top, obviously we have that bottom support right here. Um, so running off this high, this is the most crucial part, obviously. All right. So as of today, right, I signaled in my chat for people to take that. I think we have the $70 call for ozone. Also, I'm in the wrong country right now. Same setup though, almost identical. It's almost as if ozone has futures. Yeah, I know. I didn't. I do that all the time. I was wondering why I didn't have a chart. All right. Sorry, I'm a little laggy right now, so I'm not able to chart this very quickly. All right, so we have our resistance, right? My trend line's a little goofy right now. Sorry about that. I'm literally moving at like Stone Age speeds on my computer right now. All right, so nice clean break of the flag. We actually had a cup and handle. I believe me and Astro and Miles played this one. But nice cup and handle right here, climbing up above this resistance that we had right there, and then breaking into this flag, pulling back to that support, and then bouncing and breaking that 9-day moving average. So now we see the setup on the daily, and we go down to our hourly. All right, so when I'm looking for swing trades, oh god, the dyslexia came out. So so one of the things that I like to look for is accumulation, right? So we can see right here, as we kind of consolidated in this flag, that we have we have big volume spikes, but we're staying really well below that moving average, that volume moving average, and not really making any significant ground. Now, ozone as a whole has started accumulating more and more volume, more and more sentiment, so we're expecting higher and higher volume. Here we get a pullback really strongly to support, ride that support down, and then now we have this EMA crossover. So the 9-day moving average, that's the black line, going up to cross over the 50. Now what I do so that I don't miss these plays is I add, and this is the reason why that I alerted this play today, is I go and I add an alert to my volume MA. Crossing, EMA, and I start with the first lowest time frame. So the 9-day over the 20-day. So once that 9-day crosses over the 20-day, usually I'll get my first initial uptick. And then as that 20-day goes to move over the 50-day, I see continuation from there. And so right now we're above the 9-day moving average on ozone. We have a very apparent and consistent accumulation of volume. So we don't really, here we have a little bit of low volume here as well, but we stay pretty consistent. No crazy spikes, but at least consistent buying volume pushing this up. Ozone is one that can easily oscillate and jump up and down, as you can see here, but when it decides to break out, it'll break out and it'll run. And I think right now, based off of where our high is, right, we have the 68, it looks like 69. A dollar away would be $70. So breaking out of a flag, I would expect higher highs. And it has the volume to do so. One of the things I don't do is I don't play Ozone short. I know that I'm most well protected by using anything at least a month out, because at that point, any pullbacks, because you're going to see a pullback, usually and most of the time, and this could very well happen, you could see a retest of your support, which is usually on the hourly where your 9-day moving average is going to cross your resistance, because that in itself is also I wouldn't say a buy signal, but it's almost as if buys are triggered into the break of that resistance. So when the resistance actually goes across the blue line, or when the EMAs go across that blue line, you'll see continuation from there. And so when we're looking at these, we also want to be looking at the contract. What's the risk to reward if this ends up hitting $70? Ozone has a relatively cheap contracts, and especially when you're going out March 19th and stuff like that, you still have plenty of time in order to collect that premium. And then so we have, let me go over this, make sure I'm not missing anything. All right, so we find our trade. We like stock twits. Like Twitter. I can't even spell Twitter right. I'm so stopped. So Twitter is also another place. I know a lot of you already know this, but if you don't have a Twitter, it's going to be really hard. I'm not going to say it's going to be really hard to trade, but you can build your own Bloomberg terminal in a way. As far as news and stuff is related, it's all about how much research you're willing to do. There are people out there who love like one stock, and they chart one stock, and they trade one stock, and they are out there and they tweet, and they're constantly putting out information, and this information ends up being really vital for us because a lot of it takes math, like doing fundamentals, adding, subtracting, stuff that's outside of just technical analysis and stuff like that. So there's extra little bits of things that can help when you're utilizing Twitter. So I'm going to actually hop on Twitter really quick. I'm going to show you guys how to find. I know this all seems kind of like off the kilter, like off topic, but this is just how I find my swing trades, how I find new people to follow, new ways to get information faster. So go right here. And if you guys have any questions as I go along, please feel free to hop in and let me know. So while that loads, so we like to search on StockTwits and Twitter, and that's one of the first ways that we get indications for positive sentiment. But, and this is a big but, because this is probably trumps both of them, and if you guys don't have access to it, those of you in the chat, we should have this done, I'm hoping by the end of next week. But if you have the money or the resources to use Flow, right? Flow, for those of you who do not know, Flow is just essentially the options that are being purchased, whether it's puts or calls, and it basically gives us an idea of what the sentiment is for people who have more money than us, or market makers use these as ways to hedge themselves, all that good stuff. So I'll put Flow. There's a lot of different sites that you can use. But for example, today right when my alert went off on ozone, I think within 15 minutes, I saw $80 calls for June. Now that's a little bit far for me, and I think breaking out of a daily flag that March 19th is my best bet. And I also really, really like the $70 strike. The premiums should move really nice on that one. So we like to start with flow. We like to go on stock twits, and we like to go on Twitter, because we can't rely on one thing to be the source of our. Obviously we got to do our own due diligence, do our own reading, but we also have to utilize these tools for what they are. And if we can see where people are putting their money, it can give us an idea of how strongly, because at the end of the day, this is all a giant chess match. It's a big psychological game, and you got to think about how people are thinking about this stock, or what are these people feeling? What are they saying? And there's actually websites for that. I believe it's Social Sentiment IO. I'll pull that up for you guys here shortly. That one actually overlays a 9-day moving average on top of the price, like how far the price is going, or the sentiment, excuse me, how high the sentiment is across all of social media. And that will give me an idea of how that sentiment correlates with the actual movement of the stock, because people can want a stock to move all they want, but if nobody's buying, or if market makers have their foot on our neck, then it's not going to move. So that's a good thing to have and identify as well. Those of you on Discord, I cannot see. I closed out Discord, so hopefully you guys are not adding me or anything like that. If you have any questions, make sure to hop on there, or on YouTube, and type on here. So we like flow, we like stock twits, we like Twitter, and after we get all of this, and this could be anything. This could be, an ER report, right? We could have ER that's positive and gives us GRWG had good earnings the first time I ever played them. I played them the day after earnings. Today, one of the ones that was on my watch list was Deer, which is one that we played before, but they had earnings and they immediately spiked up. I actually think I may have missed an opportunity there, but the market was filled. I was losing my mind watching Baidu. But so we have ER. We have incoming news. I don't know why I made that bubble so small. So incoming news. You guys see that? Okay. And let's see. So all of this right here. And then we also have key levels. So with the key levels that we have, that would be any like major, like let's say ozone, right? If we see that ozone is approaching a key level and we start to see flow come in for ozone, that's adding to that sentiment, right? So we already know that ozone is the Russian Amazon, right? We already know that they are turning a profit. We know that they're expanding. We know that this last season was not that bad for them and actually gave them a chance to kind of get their leg up. And it's also one that I haven't been able to get my hands on like a ton of detailed news. But I do see how ozone moves within these markets, and or how it moves within the other market, the one that I accidentally just pulled up, which they move identical to. But seeing, I think ozone has, when is the earnings for ozone? That's right, we went over ozone, I think a couple days ago. Let's go look on the dailies. I'm curious to see when earnings might be. Oh, that's right. Okay, so that was correct. So March 3rd. So it would make sense. There is a possibility, and those of you who are in our Discord have seen these stocks make new highs and then right before earnings pull back. And so that's something that could be occurring here, but this is also setting us up for the potential for a double top. But in the meantime, it's broken that daily flag, and I'm going to go ahead and take it. But if I am looking at it at this 9-day moving average or at this resistance here, and I start to see $65 calls 2 weeks out, or then I see $70 calls for March 19th, or $70 calls for February 20th, whatever the strike may be. That's going to add to that sentiment, because that means people with big money are watching the same levels. And who moves the stock? People who have money and buy stocks. And so as long as I see that people are putting their money where their mouth is, I'm going to likely take a position if everything and all of my prerequisites line up. So we have the flow, stock to its Twitter, at key levels. We like to have ER. We like to have incoming news, maybe a merger, right? A partnership. I don't know why I haven't made one of these since kindergarten. It's been a little longer than that. Okay. Yeah, so we like to have those. We like to make sure that we have a good idea into the sentiment. And then once we like what we see as far as the sentiment is concerned, we're going to go ahead and we're going to step onto the chart. Because the difference between day trading, day trading, scalping, all that other stuff is you don't need to know who the CEO necessarily is, or you don't need to know whether they're turning a profit. You need to know whether it has enough volume to get you from A to B, and if it's at a key resistance, you need to, those kind of things. It's quick, it's fast. It helps if you know those things, if you have that underlying information, but if you're just looking for momentum and scalping opportunities, then those details can be irrelevant. I still don't know who owns Kodak, and I mean, they sponsored me, so not actually sponsored me, but I mean, so all in all, just a quick check. Everybody can still hear me. The live chat's been a little empty, which means you guys are listening, but I just want to make sure. Send me a thumbs up if you guys can still hear and see. All right. I think there's a delay on here. Good? Okay. Perfect. So, we get an idea of what our sentiment is. So let's go right here. And if you guys don't know how to do this, $. Nice, Frank. I'll pull those up and I'll let you see them. So a lot of these are going to be charts, but I'm looking for more for information, links, things that might be a little bit hard to find. Let's see. Yeah, of course. So we're looking here. This is business update. So it looks like services exceeded. I'm assuming that's 74 billion, with GMV growth accelerated to over 140% year on year. Numbers of orders increased 29.6 million. That's great. Growing by 137% compared to the 12.5 orders delivered in Q4. So a jump from 12.5 to 29.6. That's going to build sentiment. There's an ad. We can add that to the list. Share of Ozone Marketplace GMV have reached 52%, doubling versus 26% in Q4 of 2019. Let's see, when is this? February 21st in Q4. So this was last. Yeah, that's right. I just wanted to make sure I had the the right year. Okay, so GMV services increased by over 100% year on year, exceeding 195 billion. So all of these things, operating cash flow reached break even for the full year of 2020, and Ozone, I believe, is a relatively new company. So all of those things. So that's just one. Just by just scrolling a few times, I was able to find that article. Okay, so that kind of weirded me out. See if we can find. And not all the time, you got. Not every setup's going to be totally perfect. As far as finding every little bit of information, but the most important thing is that the sentiment is there. So mostly just people flaunting their positions at the moment. But it does look like, as far as the financials are concerned, which that's going to be big. All of these e-commerce platforms, I mean, Melly has ran to over 1,000. I think farther than that. Jamia has run from like $11 to all the way almost to $70 in less, like I think it was like 3 or 4 months. So these e-commerce brands are moving and moving really really fast, and that's nothing to shake a stick at. And so when you get these big pullbacks, they say buy when there's blood in the street, because when you get these significant run pullbacks, Jamia is having a significant pullback. I cannot wait for it to have earnings, and if it falls on earnings, I'm super stoked, because then I can get back in, because Jamia has better. So I'll write this down. Let's write it right here. Flowalgo.com. Hopefully you guys can see that. Okay. So that's answering your question, William. So now that we've found, at least everybody's seeing the same levels, there's just consistency. I'm not seeing anybody talking about shorting Ozone. I'm not seeing anybody talking about, it being one of their, losing. I'm seeing most people have it on their winners list. And that's usually for equity. A lot of times it'll be for equity. But as far as the swing trading is concerned, on the daily, we've broke above the 9-day moving average. So when we get above a 9-day moving average, that's usually a bullish sign. The volume picked up here. Okay. So sorry, I was just making sure that you guys can see the indicators that I do have up. You can also put VWAP on. Excuse me. Here we go. There we go. So VWAP as well. And a lot of people use VWAP and the 9-day moving average. So when the VWAP, and this is also something I should go over as well. So if on the hourly, you end with a bullish candle above VWAP, normally it's going to be good for a swing trade. So 1 hour, let's see. Yeah, we'll erase this. So on the 1 hour, I want to see a bullish candle above VWAP and the 9. And that's the setup that I want to see. And so in regards to, hold on 1 second. Okay, so sorry about that. So on the hourly, end with a bullish candle 380p max. What's that? Matthew, what do you mean by that? No. So no. So when let me see if I can fix the screen. Sorry. Is it better now? Yeah, sorry about that, man. I'm not sure how to change that quite yet. I'm not a YouTube pro quite yet. So back to your question. So if the 1 hour candle, even if it does finish bullishly, yeah, you will still have an opportunity to take that for a swing trade. If the candle is close to completing, and usually for the most part, by the last 5 minutes of the day or the last 10 minutes of the day, you're gonna see that swing trade opportunity open itself up. And so if you see no big shorts coming in, it's a matter of being intuitive and feeling out the stock. So if you see strength towards the end of the day, even if it's a pullback, it's still one of those things where if the candle is going to end bullishly, then that's when I'd have to take or going to take my position. And so I mean, like, I'm using ozone just because this is one setup. You know, like having a bull flag is always really, really, really great, but that's just one setup. We also have, and I'm going to use a couple different examples that I already have. So swing trade, you got to just look at it like it's almost no different than any other style of trading. You're looking for a high probability setup, but you're looking for it on a higher time frame, right? You're looking for it on the daily, you're looking for it on the weekly. Because the difference between the 15-minute and the 30-minute is that you're going to see a longer term or a longer play out of that stock if it's on the daily. If it's on the weekly, it's going to take even longer. So when you go down to the hourly, you're basically making sure that you have some type of bullish setup on those lower time frames, so that when you get to that point where you're looking to take that trade on all three different time frames, you're seeing that same opportunity set up. So if you're a scalper already, or you're a trader already, and you're any kind of trader, and you like to trade inverted head and shoulders, start looking for inverted head and shoulders on the daily. Look for stocks that have pulled back a lot. Or, I mean, let's see if I can find. Oh, we were playing it today. We'll do, I think GRWG did have an inverted head and shoulders potentially that would have gotten it out of this wedge. So right here we have a wedge. This is the 1 hour on GRWG, and we're going to go look at the daily, and we're actually going to see if this could possibly end up being a swing. Now, wedges can go either way. This, more than likely, or most of the time, you might see a reversal, or you could, or excuse me, not a reversal, but you will see a breakdown. But right here, in this, I'm going to draw a circle around it. Oh, that was the worst circle in the world. Anyway, you get what I'm talking about. So right here, this is an hourly inverted head and shoulders, right? So we haven't seen that big of a decline on GRWG. We're also not too far away from our support. This blue line here is our support. We're actually going to have to fix that support line. Thanks for your patience, everybody. This is just how I do it, so it takes time. I'm just experimenting with that trend line. We're going to go to the daily and go find our trend line there. But that 200-day moving average right there is more than likely where my support is. So I'm going to go back up here to the daily. All right, I think I see my support there. There it is, perfect. So see how both of those wicks respect that trend, if it'll let me. There we go. There we go. Alright, I just want to make sure that's perfect. Alright, back down to the hourly. Ah, okay, so cool. This will have to be adjusted just a little bit. Okay, so we have our daily support right here at the very tip of this descending wedge, or this wedge right here, right? So as we kind of near this wedge, we could bounce off of our daily support. We should bounce off of our daily support. If we end up bouncing out at this point right here at 59.30, and especially if it's on the hourly. So already I see that GRWG is continuing to move up. It has taken a beating with the rest of the cannabis sector, because the cannabis sector has just taken a nosedive. But in this case, GRWG has always kind of floated off and done its own thing. And in this regard, GRWG could absolutely bounce out and break above that 59.30 level, which at that point I see a bullish setup, or I see a bullish breakout on the hourly. I already know that we have a decent setup on the daily, being so close to our support. We will always want to buy whenever we get to that support level. We don't have any negative or like Hindenburg or anything that would kind of shake investors off. I do believe that price targets have varied from 65 to 80. So we're still within that range. We could end up consolidating as we go up into the high 60s, but the setup looks good. So 59.30 and high volume also. So we finished the day, this hourly candle, with nice high volume. So that's something else we need to add to this. Accumulating volume. So when we're looking to take a swing trade or look to take a trade, period. Oh, kicked my screen. So when we're looking to take a swing trade or any other kind of trade, we're looking to essentially, well, we want to identify whether or not it's starting to build up volume or not, right? So usually we're going to have to do that by looking at the daily again. Okay, so right here, I got you. Sorry, I just had a message come in. So right here, volume peaks up right around that high, and here we're starting to decline right as we get to that support. So if we end up bouncing and breaking above that 59.30, that would give us a bullish setup on the hourly, which would give us a chance to break to the upside and take this for a swing trade once it broke above the 9-day moving average. So 59.60 is where that 9 MA is. So once we broke out of that 59.30 level, that would be my confirmation on the hourly, and then I could take that trade at 59.60. knowing that we've broken out of our downtrend on the daily, and on the hourly as well. So we want to see breaks on that, or potential breaks on that daily. Absolutely, that's a really good question, Mike. So volume is the most important thing, in my opinion. It's like, have volume, will travel. You know, like if we have the volume, we will move. And so let's go right here. That is a mess. So yeah, we're building a little zone right underneath between the 50-day and the 20-day. But the volume MA right here, when that's essentially almost like the median, right, for the volume over time. So if we go here to the hourly, kind of zoom out here. So on a breakout, this is what the volume MA is looked for or used for. So we can right click on that volume MA. So add alert. Volume MA right there, crossing. And so when the volume on the hourly crosses that MA, that's going to let me know that we have enough power, or enough, I don't want to say power, but enough sentiment to, not sentiment, we have enough shares and enough volume to push us higher. You can think of volume as like, swing power for a golfer. Like the more volume or the more power we have, the further that ball will go, or the further that stock will go. Baidu today was a perfect example of how, keeping track of that volume MA, I had a volume alert go off, I think like every 5 minutes on Baidu, because every 5 minutes it seemed like it was still breaking more volume was just coming in, and each 5 minute candle was breaking that MA, and so what did we see? We saw huge momentum to the upside. So it signifies momentum. It signifies the distance that we could travel depending on the time frame that you're looking at. So if you see high volume or accumulating volume on the daily and the weekly, that's usually going to be your opportunity to buy a swing. One other one that I really like to use as an example. Interesting. Well, damn, we might have just found a play here. On live. Very cool. All right, so this may be a good live opportunity to show you guys what exactly I like to look for. So we're gonna start way back and kind of show you guys what I was looking at. I've left this chart up. I haven't changed it at all. So on the daily or even the weekly, yeah, more demand as well. So on the weekly or the daily, we had an inverted head and shoulders. And so we had a bit of a shoulder here, head there, shoulder there, and then we ended up breaking to the upside to go complete that shoulder. So I already saw that there was a large, that could take 6 months to a year to play out. But I know that the initial bounce off that support, and I also knew that earnings was coming, should give us some more upside. So right here, anytime that the price is below the 200-day moving average, and especially on a stock that doesn't have like really negative sentiment or just not a good company, something like that. Excuse me. Oh god. Don't meme me. So what I like to do is, if it's underneath that 200-day moving average, and it's consolidating, and all of the other EMAs are underneath that 200-day moving average, right here, we begin to kind of consolidate. We also have a daily support that we bounce off 3 times, or actually 2 times, and then almost go for it again. So as we kind of chop around in this range, earnings comes around, right? And earnings sent us straight up to that 200-day moving average, which is where exactly I was looking to take my position. Now, I saw that the EMAs were slowly climbing. It almost seemed as if we actually retested our breakout resistance. So right here, we ran up, hit that 200-day moving average, and then we pulled back right there to that 1235 level that essentially gave us a breakout and retest of our resistance. And then right off that bounce, we immediately go back up to that 200-day moving average, which is where I took my first position in Alicola, because this is an aluminum company. They had just had their earnings that wasn't terrible, and they also were able to cool off some protests that were happening at some of their production plants. And all of that was soothing investors, if you will. But this is also just one of those stocks that's kind of like, an industrial that, I'm not going to say like older people buy, but like more value investors are looking to buy, longer term investments. And Alicola could end up being one of those. It's an aluminum company, and they produce quite a bit of that aluminum. And there's quite a bit of a demand for aluminum as well. But anyway, so right here, as long as we're above that 9-day moving average, I'm looking to take a position. And real quick, just to step out, don't be confused, because it's think of this as like we're looking at the 5, right? So this 5-minute chart may last 2 months or 3 weeks, but you have to play this in slow motion. So don't look at your P&L, look at the chart. And so as long as we stay above the 9-day moving average, what I say, we stay bullish. And you can see that even here on its pullbacks, it immediately taps that 9-day moving average. So having that 9-day moving average is really, really vital. But once we break and stay above and reject, see this daily candle here, moves all the way down below these EMAs and gets pulled right back up to that 9-day moving average. Next day, we gap up, and we immediately... I'm not that bored. I'm just tired. But we immediately gap up and we break that 200-day moving average with really, really high volume. So breaking a 200-day moving average or breaking a major resistance with high volume is another prerequisite that you can add to your list. So high daily, right? Looks like a P. Daily breakout. And this can be I like how I whipped around that chair. This can be a EMA. This could be a 200-day moving average. This could be a gap. Right here on Alicola, I'm a little bummed that I missed this, but it filled that gap that it had on the daily here. And you see that represented by the purple box. So the purple box was the gap, and the gap got filled. And that gap got filled with what? High volume that ended up going and touching that volume MA that has risen or rose off of this initial pullback with earnings, because earnings were, I guess, very depressing for some investors. But nonetheless, we ended up getting a pullback and then immediately jumping back up, and that volume showing us that Alicola could and more than likely will continue to the upside, especially after dumping on earnings like that. I think we make higher highs. And so when I'm looking to take swing trades, I can only take my best jab at what this is going to look like. How does the stock interact? And as you play the stock a little bit, or play it a little bit more, you kind of get to know how it moves. Lemonade's not one that you can day trade that, but you don't go with weeklies or zero TD unless they're $5. What is a gap? I keep hearing it in that. Dim, that is an amazing question. Thank you for clearing that up. Yes. So I like to say each swing trade is going to produce or give you a different opportunity, right? So with an EMA crossover, I can bank on continuation. Why? Because the 9-day moving average crossover. Then we have the 20-day moving average crossover. Then we have the 50-day. So when the 9 crosses, if the 9 crosses with high volume, then I know it's going to pull those other ones up with it. And that's going to trigger more buys, especially after earnings. I'm going to write that down because I want you guys to really, really take this into account. After, that's right behind my head, so I'm not even going to do that. Let's see, can you guys see right here? Yeah, you can see right there. Very cool. Let's see, after earnings. So earnings, yes, ma'am. I will. I might reorganize it though, 'cause this is a mess. Right. Okay. So we have different qualifications, but the number one thing is the top prerequisites for me is always going to be decent volume. We have to see at least a rise and accumulation. That doesn't mean that it's going to, immediately just pick up that big volume. But if you have, something like this, there's your volume bar. So your volume looks, usually sitting something like this, and then all of a sudden you get volume that looks like that. That's going to let you know that the buyers are stepping up. They're starting to accumulate down there, right? And that's going to be really important. Hopefully you guys can see that. Okay. Mike, that's relative to the stock. So Sundial on a daily basis has over a million. I don't need to write that down. Has over a million shares always traded because it's a lower price stock. Amazon may not look, or Roku. Now Roku is a whole different story. Roku will run on nothing. But at the same time, those higher priced stocks sometimes put it instead of the chart picture. Oh, okay, fair enough. Yeah. Here, I'll do this, so that way you guys can see me a little bit better. Give me a second while I adjust this. All right. Give me 1 second. I want to make sure that I at least have something up. That's my concentration face. All right, how's that? Yeah, we'll still screenshot this. Okay, so we'll have to erase a few things, Dims. Don't get mad at me. Where did I put the eraser? No eraser. So let's do this more or less like, let's see. If actually, um, Bill Gates. If you look at Bill Gates, the Steve Jobs glasses, but actually oddly look like Bill Gates. Um, so after earnings, right? So that would be when, after earnings usually is a great time to buy. I'll show you guys why. It's just a couple more examples. I guess you're right in this day and age, Tim. I'm the good one, right? So I want you guys to pay attention to check this out. This is really, really, really. This is where I think my eye gets immediately pulled to stuff. The earnings we dropped from we were around 1934, pulled all the way back to 1150. At 1150, at that point, the next 2 days we stayed in chop, right? Didn't really attract any buyers. Then immediately we started breaking. At the 9-day moving average, at that point, if it's not going to continue to fall, it's going to go right back up. Period. If it's not going to fall, unless it has an established downtrend that it's going to need to break, if it ran up into earnings and then tanked, or and then it runs up to that earnings day, or that if it runs up and then earnings pulls it back down, and then it runs up to the resistance, and then just kind of chops or doesn't break out and rejects, then maybe. But with Jamia pulled back a lot and then flatline, which means that they weren't looking to push it lower, right? So if they're not looking to push it lower and there's blood in the street, that means that we're going to go look to buy. So if that's the case and it's doing this, and we can start to see a rise, we see the volume starting to pick up, which we see right here. You see that right there around November 18th. All of these days we start accumulating huge volume. And obviously this is a diamond hand situation, because all in all we're just trying to stay in trend to the upside. And so, finding these after earnings, I think let's go look at DE, which is John Deere. All right, so look at that. Check that out. Earnings sent this thing way, way, way higher. It looks like they actually pulled back the day before earnings really, really hard. One of the reasons why I think Jamia might completely reverse. I think Jamia actually looks a little bit like this, and Jamia may end up, rather than pulling back, may end up jumping up. But it would be curious to watch. But this is one. We could do the same thing. Now, all right, that's good. That's too much. So that's a perfect bull flag on the 1 hour, with the 9-day moving average moving up right there at 329.86 with high volume right after earnings. And so what I would be doing is I'd either be waiting for a pullback or another sign of strength. Here, these wicks, because wicks showed me that there's either, whether it's the bottom or the top of the wicks, show strength or weakness. So here we see weakness because the sellers or shorts are coming in right here at the top and keeping it down at this level that we have here. It looks like they're keeping it at 332.50. Sorry. And so, but it's still sitting above VWAP, and right now we have the 9-day moving average looking to kind of cross up. So it may continue to flag out while that 9-day moving average goes to move up. And so what we could do is we set alerts on either side of those, stay paying attention to the alerts, and then when it starts to go for that break, we can and this is one of the beautiful things about my strategy as a whole, is that I'm never getting into just one contract or one thing. I'm looking to get into a swing trade, and I'm also looking to take maybe a weekly if it's Monday or Tuesday, or at least go 2 weeks out so that I have multiple different strikes, multiple different expirations, and when it does get that initial breakout, say it pulls back, I TP those weeklies, I take that profit off the table, and there I can use those profits to either hedge myself if something starts to look a little fishy. If it starts to go pull back on the hourly really fast down to that 9-day moving average, then that may be another opportunity. But all in all, I'm looking to stagger those positions so that way I can execute that day trade, and if I want to, put it into the swing trade or hold that original contract that I had and then add to it for a swing trade using those profits. And so seeing, like, obviously here we have John Deere sitting on VWAP with high volume right after good earnings. So all in all, I would either, well, it's a little late now, more than likely this thing will either gap up or stay in range going into tomorrow. So what I would do is I'd see that 332.50 is the biggest level. So I'd set an alert there. And then I like to go off of the lowest wick when I'm looking at my stop loss or potential, like, this is not going to work out alert. 332.64, because if it makes a lower low, more than likely it's not going to continue to go up. Just curious, do you have a number of swing trades you're willing to take each day? I guess how many? That's a really good question. I think I mean, yeah, absolutely, because for me, I'd say I don't count my leaps as swings. The difference between a leap and a swing, I don't need to write that down. I will write that down, though, before I get off. But a leap is going to be, I'm going to be buying maybe a year, 9 months, 8 months out, really, really far out. And I'm going to be, it's either speculative or I'm thinking of it at just as if I would if I was buying equity, right? So if I'm buying equity, then, and hold on one second. But anyway, so if I'm you know buying equity or I have something that's long term, I don't need to cut it, or I don't even need to consider it part of my risk. But if I'm taking swing trades that I'm looking to take today, and if it's if I'm staggered, I may hold into tomorrow. But if right, buy it and forget it is a leap, exactly. And those can be extremely lucrative. Extremely lucrative. Blink leaps would have paid you so well. It would you could have gone to the top of the strike list where it was $60, and you would have immediately. I think even if you've taken a $50 or a $60 strike, those were $15 at one point, and they were several months out. So really, really beneficial. But for me, if I'm taking a swing trade, I'm probably going to keep it under 5, because at that point I cannot manage all of those different positions. You know what I mean? There's too much. Like, I can have all the screens in the world. I can have all of my alerts set, but I'm only a human and I can only react so fast. And I have ADHD, so like, if I can, then or can't, then I'm sure like your average bear probably can't either. But just micromanaging each one of those positions, especially if we're looking short term. Swing trading a month out, we don't have as much worry. And that's why I like to stagger things, because if I have made enough profit to cover that stagger or completely off of the weeklies or the 2 week out contracts, then I might let that thing run and just see where it goes. What are you laughing at, Dan? But I would say 5, is a good number to keep that at, because that way if you are looking, and I'm speaking specifically to those of you who take a swing trade and your goal is to take profit in the morning. That is the most lucrative, in my opinion, trading style that there is, right? You're either right or you're wrong, and 9 times out of 10, if you stick to your gut and you know how the market's moving, like yesterday we had a really, really slow, choppy pullbacks, like, yeah, there you go, William. There you go. That's a good way to put it. But anyway, yeah. So that's really good. I actually like that a lot. But yeah. So just keeping and it helps keep your risk down. And let me add something else. The more contracts you can afford, the better. Not how many contracts can you get, like, period. Like, if I have a $1,000 account, that means I can buy 15 contracts that cost, whatever, dividing the, 15 divided by 1,000 is, whatever those contracts are going to cost. I'm not going to buy all those. I am looking to be able to stay within my risk management and still be able to buy multiple different positions, because I tell you what, FOMO is a kicker. And one of the benefits of swing trading into the next day is we're looking to take advantage of the traders of the tomorrow's traders, right? That sounds bad, but we're looking to take advantage of the IV, because they say dumb money always opens the market, smart money closes it. So I'm looking at what's going on tomorrow, right? And if I see a bullish setup, like Baidu, if you guys remember me pulling up that chart, had a really, really nice setup. But it did not really, it gapped up heavy and then immediately pulled back, almost filling half of its gap. So you would have got an IV crush had you entered the contract that morning. But if you swung into that day, you would have caught the IV and been able to take profit. And that's where the beauty of swing trading is, in my opinion, is that most of the time that you're swing trading, you're sleeping. That's a fact, unless you don't sleep like I do. But most of the time you're sleeping. Most of the time, it takes, I would say, like a good, I don't know, an hour. Yes, jump. Yeah, a swing trade is. Oh, sorry. Yeah, it's always going to be held overnight or for multiple days. Swing trading can go for 2 to 3 weeks, most of the time. Sometimes even a couple months. Anywhere past that, when you start looking at like 8 to 9 months, that's when you're looking at leaps. You're looking at set it and forget it. So. Oh God, man, he's gonna drop through the ceiling. Yeah. We'll switch angles on you guys. All right. Yeah. So the best thing about all of this in general is that, um, you know, if I take, if I can get in 10 contracts, right? Um, yeah, I'll go over a stop loss. So I'll go over the strategies really quick as we kind of wrap this up. And I think I might end up doing a part two on swing, because I've kind of covered like swing trading in its entirety. But I might be able to do a follow up video here maybe this weekend, kind of tailors, fine tune some details for you guys. But oh, do I set a stop loss? Honestly, no. I set stop losses for you guys, but I personally don't. I play the chart. So, hear me out, right? Thank you, Frank. Every style has a purpose. My purpose goes with my personality. I don't like agreeing to lose money right, on swings or anything, I don't like agreeing to lose money on anything. I like to strategize on how to either play it or ditch it. So I'm not looking at my P&L. In the morning, I'm not looking at my P&L. I'm looking at the chart. And if anything, before I even go to exit that contract, if I see signs of reversal, I might even enter weeklies to the downside to hedge myself. So that way, when I go to cut that contract, I immediately get, I'm still collecting that downside. But for my stop loss, if I was to set a stop loss, like let's say we decided to swing John Deere, and it gapped down to 326.81, and I'm down heavy. I wouldn't cut that until we get to 326 even, and if we break 326 even, at that point, I'd probably look to average down, or I'd probably look to cut. But more than likely, if it bounces off the 9-day moving average, which is right there, then that's where I could average down. So I like to more or less strategize my way out of it if it doesn't go my way, rather than just agree to cut it and be done.
Yeah.
So like this may be overdoing it, but like for example, this is a perfect bull flag, but if it breaks VWAP, it is going to go to that 9-day moving average. So if it was to gap down below VWAP, it's going to pull back, and it's going to pull back down to the 9-day moving average first. And so what I could do is I could play a downside position as that pulls back. Once that pulls back, I can take profit on those weeklies, and then I can look to use those profits to average down, right? That way, no losses. I mitigate as much as I can as far as losses are concerned. Sure. Yes, Mike. Yeah, I mean, absolutely. The beautiful thing about cryptos is they never sleep. So really, setting alerts on crypto is the number one thing. Number one thing. Set alerts everywhere, on everything that you can that is important to you as far as continuation. Volume. Set volume on the hourly and the 15 on that. Yeah. Yeah, definitely. Okay. So let's say, like I said, real quick, just if you missed it. So we break below VWAP, which is where we're sitting. That candle is sitting right now. So we break below VWAP, and we know that we're going to go back to that 9-day moving average, which is the first support that we have. We play our put position, we play weeklies to the downside, and then we wait for our bounce. If we don't get our bounce, then we cut that contract, and we look to either continue the downside or just exit the trade completely. So let me read over this really quick. So daily or weekly time frames, we need to find correlating EMAs. So really write that down. So I'm going to go to JMIA here. And I have found, along with some of the other people in here, have found that JMIA respects the 2-hour more than anything. Okay, so accumulating volume. Oh. Hold on, I need to get a new marker. Marker. Oh, I got the markers right here. Oh, that's not going to do it. What about a Sharpie? That looks ancient. Sorry guys, need a good marker. Alright, we'll go over this and then we're going to wrap this up a little bit, but So correlating EMAs, right? This takes a little bit of digging. You have to study a little bit into that stock, click through those time frames, and I'm going to add a few things to this that you should keep in mind. Correlating EMAs. So we want to see correlating EMAs and what that looks like here. Actually, hold on one second. So I believe that we found, I believe it was on the 2 hours. So we're looking for we're looking for the EMAs to be acting as strong supports. So let's look at the 3 hour. Beautiful. There we go. Okay, so we can see here, man, Jamia is going to spill if it does not hold up here. So right here, we see a wick right there, wick here. We see it hold the 50 there, bounce back out. Same thing here. We hold the 50 right there and bounce out. So we can see that the 50-day moving average correlates in each time frame, right? So I think if you go to the 6 minute, so you're just looking, you're experimenting, you're going to try and find which time frame the EMAs bounce off of or respect the most. And there is going to be a time frame where that occurs, and you got to keep your eye out for it. So Jamia on the 2 hour shows a lot of respect. We could go to PLTR since that's one that we all play. We can go see, and this goes for the higher and the lower time frames. PLTR with the gap up already. That's beautiful. I love it. Hopefully we don't double top. But anyway, so looks like here, there we go. 6 minute rather than the 5 minute on PLTR. Look at the 50-day moving average right here. Look at the bounce right off of it. Look at it pull back down at the 50. Even in after hours, it touches the 50-day moving average. And then as well as the 20. Looks like the 20 is a strong, look at these wicks. And that's all I'm looking for. It's not that complicated. It's just a matter of seeing where do these wicks stop. What stops the wicks? What's keeping them from falling further? And when you find that, you're able to see where those strong support are. Because EMAs are just wiggly supports and resistances. Because you have them on all different support or time frames. They're just moving supports and stuff like that. So you'll find that a lot of the times, if you were to draw your support and resistance, that these EMAs will coincide or almost line up directly with your support. So if we draw a line here, we can see at some point right there, it's perfectly aligned with my resistance. Now we're moving up, and more than likely it'll stay and converge kind of right around there. So, I mean, like right now, PLTR, especially with that after hours movement, more than likely Kathy Woods, I would expect a gap up on PLTR. And so let's just prospectively look into PLTR, right? So here's a couple different potential plays that we could see. I like how I guys just point up like this. So an inverted head and shoulders is the first thing that comes to mind on PLTR. An inverted, and that's one of my last points. So correlating EMAs and high probability patterns. So high probability patterns, this marker is about dead. for some reason. Yes, I did swing PLTR, so that's why I'm going to go over this. So I'm going to show you why I took PLTR. So we have an inverted head and shoulders. That is usually a reversal pattern. So that means that you have this. So let me draw it out just so I'm not trying to explain it while it's right in front of my face. So you have this initial shoulder here, the head there, and the shoulder here. Right now, most of the time, I'd like to see a little bit more of like a rounded bottom, but nothing's perfect. But this is a pullback and a rejection at that neckline nonetheless, and now starting to bounce. Now, the 9-day moving average right here on the hourly crossed over, looks to be, crossed over VWAP and crossed over the 50-day moving average. That's going to pull it up. Now, already in aftermarket, we're already moving up, and we're at 27.72. That makes that inverse head and shoulders. Now, even if it ended today, our aftermarket somewhere below $30, that would be a perfect setup, because that is actually one of my favorite Plunger as well. One of his favorite setups is the inverse head and shoulders. And I have most of these written on my page right here, but inverse. My markers going a little crazy. Yeah, big brother right here. So all in all, what this setup is, and it takes a little bit of kind of intuitive, like, okay, how could this play out? You have to ask yourself, where could this go based on what setup I see right here? So normally with an inverse head and shoulders, we're expecting a breakout, right? That's pretty simple. Usually it's a reversal pattern, shows your support. Right now my time frame is on the hourly, which is kind of that median. So right now I have the potential, right, with high volume. Now we already know that Wall Street Bets is on PLTR right now. That was the number one, and they've fluctuated on and off of this one. That means there's going to be a lot of volatility. This isn't going up purely on value. It's going up because Kathy Woods and Wall Street Bets said so. That being said, if this inverse head and shoulders plays out, we see that the 200-day moving average is right there, right around the top of that gap. And this is a gap. The blue shaded box is a daily gap. So if you see a gap on the daily, that's going to trump any other time frame. If you see a gap on the daily, that's a gap to be filled. And so make sure that you pay attention to the difference. If you see a gap on the hourly or something like that, same thing. But so we see a gap on the daily right around that area. We can actually widen this up just a little bit. It's not going to let me. Well, anyway, I'll fix that later. So we have the gap. So 9-day moving average crosses about, right? We have the volume to go higher. We already see that with the accumulation of volume here. And so if the inverse head and shoulders breaks out, we break that high and make it to the 30-50 level, which is where that gap starts. At that point, we have the 20-day moving average right here nearing the 50-day moving average. We also have the potential for the VWAP to continue to kind of move up and then cross over the 9-day moving average. So you have multiple different crossovers that could potentially happen. Now, what happens if that it does continue to move up? It's a catalyst. It's a snowball effect. So the first thing that we see is, I'm running out of room here. The first thing that we see is a gap. Then we see EMA crossover. All right, and then we also have high volume. And then as well as we have the gap, high volume, EMA crossover, and sentiment. So all of those things right here are perfectly lined up with my prerequisites for when I should take and how I should take a trade. Um, it did, correct. And that gap got filled. Very good point. I want to try and pronounce that, but I'm not going to. This, my tongue won't let me. Oh, is that? Are you in the group? Rag, RAG, or Sadugar? I tried. I tried my best. I'm sorry. I get really nervous when I try and pronounce people's names that I don't know how to pronounce. um, so, so that's actually a really great observation there. When you have a bottom, right? So we gap down, we make that head, we start to make the rounded bottom, and then once we see that gap looks to get filled, if it starts going to fill that gap, that's going to be a catalyst to push it to the upside. Gaps are always get filled. And when they do, usually it's pretty quick. SR. All right, that makes a little bit. I'm sorry, I'm so bad with names, and when I see them, yeah, you get me. Sue Doctor. There we go. I got it now. Sue Doctor. I'm good now. Thank you, brother. I appreciate that. Okay, so hammer it home. It's just going to give me the confidence to continue to take those trades or to take the trade in itself. So yes, gaps can fill up or down. A lot of times when we gap up on SPY, we'll fill that gap, it's called a gap and go. It's a whole strategy. Some people purely play gaps. They go for the market. They go on those gap scanners. And this is a strategy I can teach you guys. Or Manny can teach you guys. I'm pretty sure he does this as well. But you can literally play those gaps because usually you'll fill the gap and you'll bounce, or you'll fill the gap and you'll continue to fall. A lot of times, usually if you gap up, you'll fill the gap and bounce. But most of the time, gaps always get filled at some point. So anyway, on the hourly, this is a high probability setup that meets all of these different prerequisites. The only other thing that I could do is make a cons list, right? What could go wrong, right? We have the 200-day moving average right there at $31 even, right in the middle of that gap, and honestly could give us a bit of trouble. But that's only one of the things that I can think of. The second is no, I did not. No, I got in first thing this morning. I didn't hesitate either. I immediately got in, like just straight in, as far as equity was concerned as well. Just because it actually fell below the pre-market price. Oh, it actually filled its gap in pre-market. Yeah, so it filled its gap in pre-market. So as soon as it opened up, I bought equity immediately. Yeah, and I mean, like, honestly, for a bottom buy here, for it to set up this way, it's a high probability setup. So, but yeah, gaps can get filled no matter what. But I like these as my pros, and then my cons being obviously Wall Street bets. Things will get shorted. It will get pulled back. They will send this to $100 if they can. So at some point, somebody's going to come in and correct it. and it's just going to be a matter of when. And so that's something that I have to keep in my mind, that I can't take this long, but I can swing trade it. And I can take advantage of the obvious institutional buyers that are coming in overnight. We've seen that almost on a daily basis now. We've seen, these big buyers. People are tracking Kathy Woods. People are tracking all of these different institutions to see where they're buying, because it's not only them following us, the Reddit people or the retail buyers. We're following them and where they put their money. And that's why having flow is really important. So, and then so lastly, right? We could add this to the pro list. Or I just wrote pro flow. So there was a ton of March 18th. I am a little tired. There is a ton of when I turn on after hours chart, last candle looks different than mine. You're missing data. That's why. Yeah, you're just missing a little bit of data. But yeah, so flow, sentiment, high volume, EMA crossover, and a gap that is potentially going to get filled to the upside. So all of those things, giving me a good setup for a swing trade. Last thing. All right, Kenneth. So let's look at the daily chart. Okay. So a gap. All right, y'all. So let's find this gap. Okay. So. I'll catch you later, bro. Yeah, I have had swing trades absolutely go bad. So one of the I'll go over it. Manny's gonna laugh. Real quick though, Kenneth, you're stuck in a gap. Gap up means pullback on the other side of the curve. Gap down means bounce. Not necessarily. So I'll explain that here. Let me try and think of a gap that just recently got filled. INTC. I got about a few more minutes, guys. Let me get to popping. So if you see these big old purple squares, those are giant gaps, right? So we actually have a gap in a gap. We have double gaps, right? So here we have a gap, and this is on the daily, so they're going to take a minute to get filled. But immediately when we break into that gap, back into the gap, we have multiple EMA crossovers. We also have a downtrend that we're looking to print. These are stacking, right? So we have the resistance. If we break that resistance, obviously we're going to get continuation. We have the 200-day moving average right here, and then we have those potential EMA crossovers. But we also have a gap in a gap. So once we end up filling or breaking above this high, we're immediately back into another gap. And so these gaps will get filled. So if there's a gap, like say on this downtrend, let's go to the weekly. So do you guys see that downtrend right there? So if we draw that downtrend, right, and we have those gaps that need, and they're not on the weekly, they're only on the daily. But when we break that downtrend, right, this trend line here, when we break that trend line, Then we have the potential for the EMA crossovers and the gaps. So when it enters the gaps, it picks up, right? It picks up speed. The gaps usually get filled relatively quickly. And that's what we've seen here with INTC running all the way from 51 in 1 week all the way to $60. And for INTC, that's a big move. But Manny, I was like, I see it breaking, to the upside, but I don't see it breaking this gap. And you can see right here, this thing loves to adjust itself. There you go. So we have a 200-day moving average on the weekly. Everything is strengthened on the weekly. It's a little bit more impactful. So gap, rejection, and immediately sends it right back down. I'll be done in a second. So, and then it ends up flagging out. But, so right there, we reject that gap. And so, and how I got to that point where I was like, there's no way I'm taking BA anymore, is because we still have stimulus that had been yet to be passed. We still were in the midst of coronavirus, which we still are, but it was the full-fledged, thing happening. And it was just simply just sentiment and news, like, oh, this is going to happen, whatever. And so that's essentially what happens there. But is we get that overlying, like, if I was a retail investor or a long-term investor, does this really does this really end up filling, because once it fills the gap, it's going to go for that 200-day moving average, and then things kind of cascade from there. Then you get the 9-day moving average crossing the 200. So when it fills the gap, it happens quickly. Or if it rejects the gap, it's going to happen really quickly. So that's a very good observation. But yes. Nice to meet you too, Steve. It's my vape. Okay, so Dim, I'm gonna go over this one last example, guys. I'm gonna do a whole different. I feel like I need to go a little bit more in depth into selecting contracts for swing trading, but I'm running short on time here, so I want to just make sure you guys get the gist. But I'm gonna go to pull up a nightmare, a living nightmare here, and Nicola. It should be, yeah, all the charts still there. We're going to switch this to black mode, because that's how it makes me feel. Dark. Dark. Do it, dark mode. Alright, well, it's obviously not going to happen. So anyway, right here, we're actually going to go down to the daily real quick. So Nicola was an absolute tear, and this was a really good learning experience for me that cost me not a lot of my own money, but a lot of profits. I made a lot of money off of Nicola. I think when I went back, I made like upwards to like 18 grand off of the entirety of all of my trading on Nicola, flipping, a couple different small accounts seemingly just on Nicola. And I got caught up in the euphoria of it, and I didn't see the potential for a possible squeeze. That being said, that's why it was really important for me to look at the share flow or the short flow. The short flow there was no more shares to be shorted. It had literally been shorted beyond existence and had gone all the way back down to $15 from a high, which we started playing this around $49, $30 levels. So I ended up making a lot of money on that. But when we ended up getting to this resistance right here, in my mind, I was thinking, I'm going to swing trade a put, right? Because we're going to hit that resistance and we're going to reject. I didn't think about the short flow. So immediately the next day, after I swing this 5 lot of Nicola, now I do end up recovering a little bit on the next candle. I think I swung into the next day, but I had to swing through a whole like mini squeeze. And so right when we broke this resistance in after hours, it started running. And I mean, like, my ass went through the floor. Like, I had no idea what was happening. Um, and I had to go look it up. And then I saw that we were missing the squeeze, or that I didn't see that there was a potential for a squeeze. And I got caught in a bad trade. At that point, there was only one thing to do, right? There was, obviously, I could just cut my puts and take the loss. But I immediately entered a weekly expiration call. And granted, I had to just take a loss. Now, I'm not going to play Nicola to the upside, and I still saw a lot of choppiness within that squeeze, but it squeezed nonetheless. And that being said, it just was one of those things where when we open up, if we open up, like, let's say, I've completely run out of room here. So let's say, price is here at $50, and we gap down to 49. That's a G. So we gap down a whole dollar. So here's what we're looking at is we're looking at the potential for, say the stock looks like this and bounces up and we open up at 49. Now, there's a potential we could gap up, but what does that gap up set us up? Frank? What? What? Oh, God. Anyway, so say, like, we have to look into the future or look at the potential of what could happen. What happens if it fills the gap? So if it ends up filling that gap, it makes kind of a V-shaped recovery. Hopefully you guys can see that. So it kind of makes a V-shaped recovery, okay? At that point, if it ends up engulfing, so we have to think about it, all right, on the hourly candle, that more than likely is a engulfment candle or a reversal candle of some sort. If it ends up going and clearing at least or more than 50% of that downtick. So at that point, from my evaluation, I could, if we break or if we reject 50, that's fine. I can cut my call there for either nothing, or I can enter a short position, or I can just stay in cash and watch. But if we end up going back up to 50, now say the market just gaps down, right? SPY gaps down, and it's important to know where your ETFs is, where your market is, where your balance levels are there. So you should always have SPY up. You should always have the Qs up. You should be watching those. But if the market bounces back up, then there's a good possibility that if you break that previous gap down, you fill that gap, that you're going to continue to the upside. And at that point, you could use that to average down and take another position. So that way, when you do break even, you break even with double. So, does that make sense? I'm out. Alrighty. Any more questions before I finish this up? Just going to go over this. So we're using daily or weekly time frames when we first go to identify a stock. We're finding the correlating EMAs that respect the stock. We want to make sure that when we go on these highs and these lows, you guys can write this down or just save this. We want to make sure that we're drawing our trend lines, our highs and our lows. So if I get caught in a bad position, I'm just watching where, if the gap gets filled and continues, then it's just a temporary pullback, right? If the gap gets filled and it gets rejected, then I know that we could see some. So a gap and go is just taking advantage of a small gap above you, whether that be the 15 or the hourly. When you look at hourly candle, do you have the next session on? You might have to repeat that question. The next session. Like the hourly. I'm not sure what that means, but so essentially, right? So if we fill that little gap above us and we reject yesterday's close, which is where the gap starts, then at that point we could see further downside. Not after hours, but the close. After hours doesn't matter. The close is what the after hours. Yep, exactly. There you go. So the close of that candle now, PLTR could completely reverse, right? And now that gap up level, or where that hourly candle ended after hours, that candle is going to be nothing more than another level for us to break if we ended up going to the upside. Right. Yes. Yes, I do. Yes, I absolutely do, because a new hourly candle opens up. So yes, I do. Sorry, I was a little confused there. Yeah, so I am watching after hours movement, because I mean it is going to give me an idea of whether we're going to move to the upside or the downside. So, but all right. So real quick, a last thing. I didn't really go over this a lot. Yeah, buy AIE. There you go. No, just kidding. The scholastic indicator. That's another one to look at. I'll show you really quick, and then we're gonna go. Can I please have PLTR back? Oh well. For you, if you're, for me, 4. So you're more than likely an hour behind, but so yeah, the last hourly candle technically, but that's not your close, right? That's not the close. The close will be your gap down level. So if it closes at 50, right, and you gap down to 49, even if it went all the way up here, that's just pre-market movement. The gap still remains. The gap, and then this becomes a level to break. Yeah, I'm sorry. I can't. The words, Dim. English is not my first language. No, just kidding. So look at this right here. Scholastic Stolastic. I can't do it. Is at 0.68, right? And that's where we rejected previously. So more than likely, seeing a bounce here is a good sign as well. Now, if it's entering into the $20 or the 20.25 range, no, you're fine, Dim. You keep me straight all the time. You're the best. Dim's the legend. So, and now that's on the internet forever. 20.25 when the indicator, the stock indicator, the stock RSI indicator, stochastic. Man, you're the SR. You're the best, man. You're the best. So anyway, stochastic indicator, and then and that's one that I'll go over more. I'll do a video on that one. So volume, we're looking for accumulation, especially around demand zones and major support levels. We're looking for flow and sentiment on StockTwits, Stock Sentiment IO, and Twitter, Stochastic. There you go. Yeah, he breaks down words for me so that I can pronounce them. This is ridiculous. Anyway, Twitter, selecting contracts that are obviously within your risk management, and then you can, have multiple different positions. That's really important, that you can afford to play. Now, if you're looking to just take a swing trade overnight, buy a contract, have at it. But especially when you're looking to, take something and you have a lot of faith in that trade. It is okay. I wanted to add this. It is okay to swing trade weeklies on Monday and Tuesday. After that, I don't swing those ever, unless I think something's going to happen like Badu. But very rarely. I'll rather go 2 weeks out. So, and lastly, what I'm trying to accomplish and what I have been able to accomplish with swing trading is capturing the movement before it moves. And that way you get every single. If you look at a stock and you're like, damn, that thing ran since open. Well, that's the kind of thing that I'm looking to set up. And then, so if you see something that ran into open or ran at open, go look at the day before and see how it closed. And you just found potentially a setup for the upside. So, but anyway, I am, for the most part, kind of wrapped up. Just want to do an overview. Those of you in the Discord, feel free to ask me any questions that you need to, and we'll do more of these videos. I'll be doing more of these streams. This is my first one, so if it's a little bit rocky or anything, I appreciate you guys' support nonetheless. But yeah, so I'm going to go ahead and wrap this up. Make sure that I don't have anything else up. Yeah, hopefully I was able to answer you guys' questions. I will, Rich. Awesome. Yeah, I'll do another one maybe this next. This is gonna be a weekly thing. We're gonna have a setup here. Hopefully one day I can get Manny and Atlas here, and we'll have a little table and we'll be able to do this in tandem together. So this is just the start. But thank you guys. Yeah, thank you guys. I really appreciate that. That's awesome. I'm glad you guys liked it. Alrighty, y'all. Well, you guys have a wonderful evening. Dim owns Apple. Tim Cook works for her. Sybil Sacks the Moon. Money time.